Here we are live. Welcome back, ladies and gentlemen. Official test start time 2 minutes. As you know, same format, 5 pages, 5 paragraphs each, 5 words per sentence, 5 sentences per paragraph, 5 computer spaces in between, 5 revisions. You can use your hyperscientific, you can use any artificial intelligence, but you must show the work and share it with the class. If you do not show the work and share it with the class, I'm going to assume all you did was use technology and you will get 0 credit for it. So, this is not a drill. Let me see. We'll make sure we have everything organized. Hydration is number one. I'm not just an engineer, I'm also a doctor. So this one goes on this side. I'm a franchisee, so I have to keep track of productivity.
That's the bribery after you eat.
A little I forgot to take down
After you
notes.
eat.
But this is for the green rangers out there, the white rangers, you know what I mean? Don't forget your McWater. Number one selling water worldwide, right here.
Don't mess it up.
Okay, there we go. Okay, excellent.
I'm in here.
All right, so where do we start? Got business meeting. I need to attend to. Well, let's start the day properly. Let's start the day with a prayer. Thank you, Heavenly Father, for all the blessings in our lives. And thank you, Heavenly Father, for all of the blessings in our lives. We worry not about what we don't have because we're in the process of getting it. And in that journey, everything we do is in your name. Amen. First things first, I'm an artist, Kim Kardashian. Top of the morning, my love. I'm a little bit busy with this rollout, but as soon as I get an opportunity, I will hit you back. Love you, bye, y'all, bye. Mayweather Jr. Top of the morning, my brother. Hey, I'm gonna hit you in a little bit. I'm a little busy right now. I have a new album on the way, and I'm under negotiations. I will keep you posted. Send my best to Miss Jackie and to see me, and everybody else at the party. I'll let you boy. Daddy Yankee. Buenos días, hermano. Dios los bendiga. Le estoy comunicando porque quiero rezar con usted. Gracias, Dios mío, por todas las bendiciones que tenemos en nuestra vida. Te agradecemos, Dios mío, por todas las bendiciones que tenemos en nuestra vida. No nos preocupamos por lo que no tenemos porque estamos en el camino para conseguirlo y en ese camino todo lo que hacemos es en tu nombre. Amén. Que tenga un día maravilloso hoy, que pueda conquistar todo lo que está en su camino, que todo lo que usted toque se convierta en barra de oro y barra de plata. Y bellos y preciosos gemas como los moisanites o los diamantes de laboratorio o cualquier gema hecha en laboratorio. Siempre recuérdese a soñar grande porque los sueños se hacen realidad. Me pasó a mí y yo sé que le va a pasar a usted. Dios lo bendiga. Tenga un buen día. Aquí estoy con el rollout. Viene un álbum nuevo. Estamos negociando, esperando en Warner Brothers a ver qué van a hacer. La subasta 200 millones. Y usted sabe, la familia dándome dolores de cabeza. Pero tengo que enfocarme en las iglesias y todas mis fundaciones y caridades y seguir dándole para adelante. Lo queremos demasiado. Siga para adelante que yo estoy contigo. Ya la va. Y rompí el récord hablando de Dios en música. También tengo ese récord, Guinness. Dios lo bendiga. One of my wives. Noel, I'm just calling you to tell you the love of my life. Have a beautiful day, all right, and late. All right. It's Debbie. I already see who's here. Don't worry. I will put you on exclusive because I'm on a live right now. That's all right. We got this. This is our year, baby. Yo, you were the first person I was supposed to message, and I had like 50 people on my thing. Hey, have an amazing day today. I have to teach an engineering class. You know, it's the sabbatical, so I can't work. But I'll keep you posted. I'll hit you later because I'm doing a live right now, and I just realized that I'm like, yo, the first person I was supposed to message was the last person. I'll hit you later. I'll let you go. Welcome to the music business. Everybody else stay in the music industry. Um, let's see. Let's go. Go Bloomberg. Go videos, and let's go with the closing bell.
Piper's pepper picking proved painful.
I'm to
So
the
he
point
ordered a
where I
supplies
leave the
he needed from
commercial.
Amazon Business
So YouTube understands what business
and
funds.
positively prospered. Amazon Business, your partner for smart business buying.
The city is a marvel of machinery for those who seek it.
These are mandatory
And
commercials.
right now we are 2 minutes away from the end of the trading day. Romain Bostic here with Katie Greifeld, taking you through to that closing bell. It's a global simulcast. Carol Master and Emily Brofeo join us now. Welcome to our audiences across all of our Bloomberg platforms, television, radio, our partnership with YouTube here on a big day, at least
It's 9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching the China Show. I'm Annabelle Rulers with David and Glass.
Good morning. We are counting down to the open of markets here in Hong Kong. Our top stories today: oil is steadying. We're a 6-month high at these levels while stocks are under pressure and growing fears of a U.S. strike on Iran.
Yeah, this is as President Trump says Tehran has up to 15 days to strike a deal over its nuclear program as the U.S. amasses an array of forces in the Middle East.
Also ahead, Blue Owl Capital restricting withdrawals from one of its private credit funds, raising fresh concern over risks in a $1.8 trillion market.
And how India's tech giants are investing in AI as the nation seeks to become a key hub. We speak to IT services firm Wipro at the AI Impact Summit in New Delhi.
Good morning. Welcome to the program. And two things top of mind, for me at least, the reopen markets here in Hong Kong, cash markets, of course, so we'll see what happens there. Pricing while you were sleeping, not very clear as far as what the open's likely going to look like. Let's call it flat, maybe. Of course, we're looking at some other specific names, but we'll get to that in a moment. The other thing, of course, top of mind for me as well is energy and oil prices, and really what this means is slow boil the Middle East story as it pertains to Iran, and of course that pop over $70 on Brent is something I'm tracking too.
Yeah, it's kind of the risk that you wonder, have the markets been sleeping on a little bit? I mean, you've seen that premium starting to get baked into oil prices, of course, above that 70 level, but there's a lot of risks and there's really a lot of unknowns as to what sort of strike the US would look to take. Would it be something that's shorter term, more sustained? They're certainly building up a presence that could sustain something over the longer term, but then exactly how does Tehran retaliate, and what kind of position are they, given that they seem to be coming back stronger from actions from the US last year, but also Israel?
Yeah, absolutely. And I think what you're seeing in the oil markets, and I'll even include not just what you're seeing on spot and futures, right? So even like things like the call skew, for example, to the upside. So it looks like markets are positioning for something, not so much as a tail risk, but something that we are largely within the sort of realm of possibilities. But the other thing I'd point out too, just so we're not sort of over sensationalizing what's happening here. As far as the price action is concerned, right, it's not as if we are getting a massive dislocation in markets and rush to safety just yet. Of course, headline driven, and we'll see what happens with this. There is a broad sense of risk aversion in the markets anyway, which we'll get to, I guess, in a moment. On top of that, obviously you mentioned the massive AI conference taking place in India, and the conversation we'll be having there as well. A lot of news, of course, on the AI front, not to mention, of course, the two big individuals, not wanting to hold their hands on stage yet.
That was great imagery, I think, of Sam Altman from OpenAI, rather, and the Anthropic CEO. Just, close, but definitely not touching. Yeah. There's a lot of concerns about the ads that were run during the Super Bowl, and of course, Anthropic's been winning a lot of enterprise customers. Yeah. Just to note as well, a story that's sort of climbing up the charts this morning. It's from the FT, but they are looking about this current funding round with NVIDIA, because they're looking to raise OpenAI looking to raise around $100 billion just from their cornerstone investors or from big tech, essentially. But now we're hearing that NVIDIA is not going to be proceeding perhaps with that letter of intent that was signed last year that could have given them up to $100 billion investment. They're looking just at $30 billion in this current funding round.
Which, if you put the reporting together, would suggest it's still a sizable portion of the current funding round.
Yes.
But I guess TBC, what's beyond the current one, which is quite sizable anyway, as far as the $100+ billion, of course, if we were reporting yesterday. All right, let's put everything together for you as far as the market narrative is concerned, right? So we start with oil, you have Brent, you have West Texas, you have the energy complex in Australia, which was up 4% yesterday. We're sideways. We're still holding on to about these price levels, I think, fortunately, and we'll see what happens with headlines. Of course, we are not extending the gains that we had coming into this Friday morning in the Asia Pacific. Let's have a look at gold. So I think we were back above. This is a spot that's coming up on your screens. There we go. It's still above 5,000. The dollar is giving up some strength after putting together a string of 4 days of gains as far as that's concerned. Some technical levels to watch in the euro. We're just now at these levels, just a touch below the 50-day moving average. Nikkei, Kospi, Oz, and Singapore. Singapore's coming online. No Taiwan yet. Today, no Malaysia, no Vietnam. We mentioned, of course, Hong Kong is coming online. In fact, just on the 30-note futures in Singapore on A50, futures in Hong Kong on A50 on your screens. There we go. Okay, we are looking at declines likely going into the Friday session. Dollar China on your screens as well.
All right, let's get more into, as we said, one of our top two stories today. That is the U.S. military gathering forces in the Middle East. That includes 2 aircraft carriers, fighter jets, and refueling tankers. Speaking aboard Air Force One, President Trump warned that Iran has about 15 days to strike a deal over its nuclear program.
We're either going to get a deal or it's going to be unfortunate for them. I would think there'll be enough time, 10, 15 days, pretty much maximum.
You want to talk business? Meet me in the onboard lounge.
Peter Piper persistently missed packages, so he scheduled his deliveries with Amazon Business.
Peter Piper, big peppers from Ride.
And positively prospered. Amazon Business, your partner for smart business buying.
Let's get more with our Bloomberg Politics editor, Laura Davison, joining us here with the latest. So it's obviously very fast moving, and we don't know exactly what shape this could take, but what is the most important thing that you're watching right now?
So a couple different things. One, Trump saying 10 to 15 days. What is important about 10 to 15 days? Trump is getting impatient, and that's the deadline he set. So there's no hard and fast reason why there needs to necessarily be a deal cut in those times unless Trump says there is. And so he is kind of, right now, he's in a moment where he is preserving all his optionality. They're amassing all of these forces in the region. This much bigger buildup than we saw in Venezuela. So they could do, something like a targeted strike, but also, like we saw last July with just looking at nuclear sites. They could go bigger, looking at, perhaps Iranian military sites, or perhaps even target some of the Iranian leadership. That would be a huge, really change of course in where this is. Trump and the White House really haven't indicated that they want some sort of massive military strike, but they want to have the leverage to say, look, here's what we could do to try to force these negotiations forward.
Okay, so what exactly, just given the backdrop of recent talks, what is it that the U.S. president wants Iran to do here?
He isn't quite sure. That at least is from all the indications here.
Okay.
He wants some sort of deal here. He wants them to back down. He wants to also keep Netanyahu happy through all of this. So he has a lot of different pieces here, but he wants ultimately to say, look, I was able to, put the Iranian regime into submission. I was able to extract some sort of economic deal, create peace and stability in the region. That is the ultimate outcome he's looking for. And we're in this point here where we have tension between that. These details are really tricky. You've got a lot of, a lot of history and a lot of geopolitical nuance where Trump doesn't really care all that much about that. He wants to be able to get a deal, but you have the kind of the expert level people, the technocrats who are trying to advance these talks forwards, and Trump saying, let's just go, let's get it done, let's worry about the details later.
All right, Laura. Thank you so much, Laura Davison there, our Bloomberg Politics editor. In fact, we're just looking at some data right now, right? We were talking about how much is baked into the oil markets right now. So our folks at Bloomberg Economics actually ran some numbers. I'm going to look at this right now for you guys as well, right? So when you look at the oil price very quickly here, so we've gone from, let's call it $10-11 on the oil price from the start of the year up until where we're, that's the white line you see on your screens, right? So what else are we looking at here? So you have obviously demand and supply, right? How does that feed into the oil price? That's a constant feature that drives the oil price as well. We talk about oversupply. That's a net negative as far as the oil price draw is concerned. You have net demand contribution as well at the very top. Now, every now and then you have the spikes in geopolitical risk premium that get built into the oil price here. So what we're looking at here is ever so slowly, the purple bars you see on your screens is adding to the premium. And our folks at Bloomberg Economics have put out this fantastic piece and model. At currently that level is at about $5, right? Given the information that we have right now. Now, that is just to say, if all this goes away, that $5 goes away. That could also blow up to the extent we saw back in June of last year when Israel was involved, and of course, that massive spike in oil prices. But as things stand, you can check this out. Of course, we're currently at $5. If you remove the tension, we go back to about 66 per barrel. But of course, a lot will depend on what happens these next few days, Bill.
Yeah, I think a really big question, for instance, does Tehran look to close the Strait of Hormuz, for instance, where a lot of those oil tankers are passing through, which would obviously drive up prices. But let's get more on this now and bring in James Jeffrey. He's Distinguished Fellow at the Washington Institute, also a former U.S. ambassador to Iraq and Turkey, and advised the George W. Bush administration on Iran. So thank you very much for taking the time to speak with us this morning, James. And I want to talk about the scenarios that you're mapping out here, because as we were just saying, this is the biggest deployment that we've seen to the region from the US going all the way back to the early 2000s. What are the different scenarios that you're mapping out, and what do you think is most likely here?
Thanks for having me on. Donald Trump wants a deal, but it has to be a real deal. It probably will have to include either no enrichment or extraordinarily tight limits and inspection of any enrichment that's allowed. That is, it has to be better than the 2015 JCPOA that Barack Obama negotiated. Donald Trump is willing to roll the dice on military actions. We've seen that repeatedly. I served on the Middle East with him in the last administration. He took out Iran's consigliere for the entire region, Qasem Soleimani, in a strike. You saw what he did to the Fordow nuclear site. You saw what he did to Venezuela. He's prepared to do this again, and he has the force to do it. He doesn't want to do it, but he will. That's the difference, and the Iranians may not get that. This is not Barack Obama they're dealing with.
Our tax experts keep more money in your business, so you have more time for your business. Less tax stress, more open houses. Less tax hassle, more oat lattes. Less tax time, more grooming time. Get the most from your deductions so you can get back to your small business with TurboTax Expert Full Service Business.
Imagine being able to build an app with your name on it just by thinking about it. Meet Base 44, a complete AI creation platform. Describe what you want and watch it take shape. You can plan, customize, and expand in any direction. From tools built for one to platforms ready for many. From passion projects to enterprise-grade systems. Everything is built in and ready to launch. It's a new world of creation where you can go as far as your imagination takes you. Can you imagine it? Let's make your dream a reality right now.
Okay, what then do you think, Ambassador, do you think is the probability of some form of strike over the next, let's call it 2 or 3 days?
I don't think over the next 2 or 3 days there's a chance of a strike, but I didn't think so when he said the Iranians had 2 weeks to negotiate last June, and then he struck Fodro several days later along with the Israelis. So Trump is capable of doing, Trump does not believe, and we don't believe, we who are following Iranian affairs very closely, we don't believe the Iranians really get this guy. They think they're dealing with the Americans. They think that they can just draw us out, wait for the election season to kick in. The ships cannot remain all that long on station. And Trump knows that they know that. So therefore, he's going to press them to make real concessions very quickly, or he will strike. He may do an initial strike that will be limited, but he will make it be clear that he will do a more dramatic strike. Now, in terms of the oil markets, the danger is that if he does not target the Iranian oil exports directly, I don't think the Iranians will close the Straits of Hormuz, because that will really infuriate their biggest partner, which is China. But if we do take out the Iranian export capability, their infrastructure and such, then the Iranians will have nothing to lose, and that will really have, as you folks can crunch the numbers better than I, a huge impact on the short-term oil supply.
So, Ambassador, the message we're getting, at least I'm getting from you, is for Iran to treat the threat as incredibly credible. Apart from, and I guess there's no diplomatic way of putting it, apart from having a gun pointed to its head, what motivations do you think Iran has to strike a deal with Donald Trump? It's something that we can trust beyond the current proverbial, treating the threat as credible.
David, that's a key point. The Iranian regime, having gone through the tremendous losses it suffered in what was a 2-year war with Israel, us, eventually the Turks in Syria and others, are in a very weak position. And then they had the huge uprising of their own population. Their goal is regime survival. We think that right now they believe that even taking some hits by the United States, Trump essentially is discriminate the Trump. So
that was one that he could get. In terms of what we're going to be tracking in particular, the hand, counting down, of course, the open of trade in Hong Kong. This is the China Show. Welcome back to the China Show. We are counting down to the open of markets in Hong Kong this morning. Futures are looking like we're going to see a bit of weakness at the open here. In terms of what we're going to be tracking in particular, a number of different things. You've got Minimax, for instance. We've seen more analysts continuing to initiate coverage on that stock. Hersey, for instance, one of the biggest gainers on the Golden Dragon Index in this time. We've got jobs data coming up, lots of sectors to watch, including, of course, energy, given the spike we've seen in oil prices, precious metals, given the moves as well in those. And you've also been watching HIBOR.
Yes, I think we are. This is on the 1 month break. We're at 3 month lows in that. And of course, after just a couple of days, we'll get an update what that looks like in about 2 hours from now. Okay, let's talk about these markets, right? As we approach the open trading session in Hong Kong here of the Year of the Horse. Joining us now is Yan Wang, Chief EM and China Strategist at investment research firm Alpine Macro. Yan Wang, good morning from Hong Kong. Thank you for joining us. I think we need to wait a few days before mainland markets come back online. But I just want to get your initial take. The start to the year hasn't been the brightest when you look at greater Chinese markets, at least comparatively, right? When you look at markets like Korea, Taiwan, in fact, even large pockets of U.S. equities. Why do you think explains what explains the underperformance, you think?
Emphasize again, it is free to join my community. The stocks I share are also free.
The techniques and strategies I teach are also free. So please don't ask me if I charge a fee, and don't say it's a scam. I only need popularity and word of mouth, not the so-called member.
What do you think explains the what explains the underperformance? You think?
I think there in Chinese market, we don't have the super hot sectors. Recent, the sectors that have been really hot more recently, right? So we have the hardware tech sector, which is Taiwan and Korea, and also we have the commodity story, which is in Latam. So in China, it's kind of in the middle. I think now for China, it's still kind of a macro call. Whether the Chinese economy is able to improve. I think the Chinese stocks are still quite cheap, but there's not enough interest at this moment. The market has gone up quite a bit, but on the other hand, there's not a lot of hot stories investors can put their money to work. So I think that's probably the reason.
Why aren't there enough hot stories? I mean, we have had some cause for optimism. For instance, we've seen a wave of upgrades around AI and different foundation models in the last few days. You compare that to what you get in the US, for instance, and that's enough to spur quite a lot of trading activity.
Yeah, but if we compare with Taiwan and Korea, they clearly their hardware is very deeply embedded in the AI boom. So I think they are the more direct beneficiaries of this investment boom in the AI space. And also on the Latam side, base metal prices have been really strong. So that has also pushed a lot of capital into that space. So I think China is kind of in the middle. Doesn't really fit into both camps. But I think going forward, I still think Chinese market should continue to move higher. I think whether China will continue to outperform or underperform, I think my view is China will likely outperform for the year because the key event that investors still need to keep in mind will be the policy choices that Beijing would have, will tell us in the People's Congress next month. So what kind of cyclical policies, what measures Beijing will have to do to really boost domestic demand? I think that is still there's still a lot of expectation going into that. So I think for the rest of the year, I still think Chinese market should do well.
Interesting, because the two meetings are coming up, I think, within the next 2-3 week window. Maybe you could be more specific, because that's largely, we know that happens every year. We know when it's going to happen. So, analysts have a lot of time to muse over what's to come. Any new information you think we might get that we should be watching out for?
I think most likely boosting domestic demand will be the most important message out of this Congress. If you, towards the end of last year, Qiu magazine published an article authored by President Xi Jinping. I think in that piece, basically it's a summary of all the speeches that he gave in the past couple of years on the importance of boosting domestic demand, both consumption and capital spending. So I think in this current environment, the Chinese economy faces a lot of external uncertainty, both geopolitical and also on trade front. So I think boosting domestic demand has become the only major that Beijing can use to boost growth. So I think most likely we're going to see some policy surprises on that front.
We'll unpack that further with Yen Wang. Two things I'm going to point out. He says animal spirits are reaching number one. And when you look at the housing downturn, it's not a problem of demand on part of consumers. More from him, from Alpine Macro, in a couple of minutes as we approach. Speaking of the reopen of markets here in Hong Kong, Hang Seng Tech, Hang Seng China, Dollar China on your screens. We are poised to open lower this Friday, 7/10 to 1%, specifically on the Hang Seng Tech Index.
Yeah, I think Hang Seng Tech is going to be really closely watched, because I was just taking a look at how's the Golden Dragon Index been doing, and actually it's been lower for 6 straight sessions. So doesn't bode that well, even though you've got some stocks that are going to, of course, be moving to the upside. We were just talking about Hersey, for instance, earlier. They were one of the biggest gainers during this period. Of course, they've also been added to index changes for Hong Kong as well. Actually, you can see already in pre-market, of course, making that jump there. Minimax Group is another one because it's had a wave of analysts initiating coverage on it. That includes UBS, Jefferies, and more upside seen for that one as well. Oil stocks to track, of course, given all of these developments around Iran. We are seeing oil that has been moving above that $70 a barrel level, but also you're seeing these oil companies in China that are moving to the upside, and precious metals, of course, given the moves that we have been seeing in those markets of late. Again, further gains here, but you're watching the China show. The open of Hong Kong is next following the Lunar New Year break. This is Bloomberg.
Peter Piper persistently missed packages, so he scheduled his deliveries with Amazon Business. Peter Piper and positively prospered. Amazon Business, your partner for smart business buying.
In a competitive global market, how are you positioning the UK as a place for companies to invest and grow?
Firstly, we are an open free trading nation. We're also investing £4 billion extra into scale-ups. We've got a global talent task force, and you've got 4 of the top 10 universities in the world. You have a stock market outperforming Wall Street by 20%. All of this adds up to a country that's a great place to do business.
Welcome back. You're watching the China Show. We're counting down to the reopen of markets here in Hong Kong. Mainland markets remain shut, as well as some other markets across the region. We're looking at likely some weakness going into the open today. We're looking at, of course, events in the Middle East, and markets are gauging the probability of an escalation there military-wise, of course, as it pertains to Iran and the U.S. And apart from that, I can't help but think, and we're going to go over this Truth Social post from the U.S. president has a lot of the world trying to divvy up their information and attention span here.
Yeah, I mean, UFOs we can put to the side for a moment, but that has certainly, of course, been very much read in the last few minutes. Let's take a look, though, because Hong Kong markets are just coming back. This is the first day of trading for the Year of the Horse, and we're coming online to some fairly muted moves, rather. But you're seeing most of those losses so far building into the Hang Seng Tech Gauge. Now, I'm not too surprised about that because I looked at the Golden Dragon Index and I saw it had been down for 6 straight sessions. So of course, it just sort of sets that tone that we've seen really whilst Hong Kong has been shut. But you are seeing some big losses there. Alibaba, for instance, still trying to really get the nuance of that one, but it is one of the biggest laggards of 2.8%. Baidu as well, declining more than 3% at this stage, even though actually to say Alibaba's, this is according to Jefferies, but has seen some pretty good ordering of items through the Lunar New Year break. Let's actually shift on and take a look, because we had the holiday data out, or some early indications of this, and what it tells us so far is that there's been a 4% increase in passenger trips over this time. So we can take a look at some of those travel stocks, how they're faring, the likes of the airlines, for instance, also keeping a watch on what other names are doing. Can see here as well what's happening with some of the different other sectors we're tracking. So Minimax, for instance, very big gains here. Seen a suite of analysts that have started initiating coverage, and they're all pretty bullish on the outlook for the stock as well. Hersey Group, we've already mentioned it a couple of times, but they were one of the biggest gainers on the Golden Dragon Index during the last few sessions. Kingsoft Cloud, though, again, it dropped around 5% on the Golden Dragon Index. You're seeing that also being reflected today. Let's change on, take a look at some of the other sectors that we're focusing in on today. So oil, of course, as we've been discussing, has been a big one. Travel stocks as well, just to wrap that up. We did see, as I said, that 4% increase in passenger travel, but you can see here moves a bit to the downside. Going back to oil and that story there, because we've seen it steadying around a 6-month high, but a lot of questions around how exactly does President Trump proceed, given he's now set this deadline of 15 days or up to 15 days for Iran to strike a deal over its nuclear program? We have seen oil, as we said, moving to the upside, and you can see, again, those oil majors in China reacting accordingly.
Yeah, 10 to 15 days is somewhat the same time duration as the other sort of element of time that the U.S. president also favors, which is about 2 weeks. The fact that he's more specific does tell you, give you a slightly sense of urgency, I guess, in terms of his decision making there, which was, of course, what Laura was pointing out to us earlier on. Anyway, once we do have the developments on Iran, of course, I promise you we will get them to you as soon as we can. Let's open up the outlook for Chinese markets while we are waiting for that other story to come to fruition here. Yin Wang is still with us, Chief EM and China Strategist at Alpine Macro. Yin Wang, the underlying thesis that you have, and we were talking during the break, was that you think Chinese consumer confidence comes back this year, and not a lot of people in the market appreciate that probability that it does. What gives you that confidence?
Yes, I think probably the more important point would be the business confidence will come back earlier than consumer confidence, because consumer confidence to some extent was dragged down by very poor hirings, very poor wage growth, very poor labor market. So I think if in the past couple of years what we had was a kind of downward spiral between very weak household business hiring and then household demand. So both they were chasing to forming this kind of downward spiral. But I think in the past couple of months we began to detect some signal that the business confidence is beginning to improve. I was in China during the holiday break. I was talking to some people, and also even just from the data towards the end of last year, we saw a lot of mergers and acquisition deals. So all these kind of things were quite recent. So to me, I think that's probably the more important point for us to try to monitor. If indeed the private enterprises, their confidence began to improve, then the economy will feel a lot stronger. And then after that, I think consumer confidence will also improve. So then the kind of downward spiral that we saw in the past couple of years will become some kind of positive feedback loop. To me, I think that will be the catalyst for growth and for a genuine growth upturn that we can anticipate.
And how does that then also feed into the property sector, because this has really been one of the biggest drags on consumer confidence as well, just the amount of household wealth that was tied up into the property sector? What's the relationship then that you see?
Yeah, so clearly, if the Chinese consumer confidence can indeed improve, then I think the economy will feel stronger. But I think on the other hand, the housing market, we need to realize the Chinese housing downturn has been going on for over 4 years now, right? From the peak, if we look at sales, construction, housing starts, housing completion, so all these indicators in the housing market are down from like 60 to 80%. So I think in economics, nothing falls forever. So I think now we are close. Obviously, we're closer to the bottom than any time in the past couple of years. So from that point of view, I doubt this year housing will give us more negative impulse on the growth front. So for me, I think more important indicators for us to monitor really would be what kind of policies Beijing boosts in terms of the domestic demand. So to me, I think that's the key message Beijing was telling us in the past couple of months. So if this is really, if Beijing is able to do something on that, I believe the economy will feel stronger compared with the past couple of years. So I don't think the Chinese housing market.
Your small business taxes handled. All your unique needs found.
With in the past couple of years. So I don't think the Chinese housing market. Sorry.
No, please finish your thoughts, sir.
Yeah, so I think if we look at some surveys, right, obviously how Chinese housing demand is still quite weak at this moment. But if we read some surveys from think tanks, from government agencies, the reasons why potential home buyers are not taking action now, are not buying, is not because there's no genuine demand. The more important factors are, interest rates are still high. They believe, maybe developers may default on their delivery. So I think all these kind of confidence and financial considerations are more important constraints on Chinese housing demand. So putting downward pressure on Chinese housing demand. But there is still, if you read those surveys, very little percentage of people actually claim they do not have genuine demand for housing. So I don't think there's a real demand issue. This is more of a confidence issue.
Right. If I'm just racking my brain out, if I recall, the definition for demand in economic theory is not just it's both the willingness and the ability to take advantage of that, right? So from a policy perspective, if it's not a demand issue, if it's a financing issue, are there specific leading indicators that you think we should be watching on for the overall numbers to start turning?
Well, I think there are still a lot of room for Beijing to really ease the restricted housing policies, right? So that they can begin to think about providing subsidies on mortgage interest rates, mortgage interest payment. They can further lower mortgage interest rates. So I think all these kind of things can still help to improve the affordability. And also on top of that, home prices have fallen by 30-40% from the peak. So clearly affordability has improved significantly over the past couple of years. So I think any measure that can really help to further improve affordability, reduce the cost of owning a home or buying a home, I think that will have positive impact on really revitalizing
Hola, Víctor. Amén, amén. Igual. Okay,
you mentioned in your segment that you think Chinese markets will outperform this year.
Víctor, buen día.
If all these things we just talked about now start to turn, how does that affect investment strategy and market leadership specifically? What are the best opportunities right now before it becomes apparent?
I think Chinese market, first of all, they're still quite depressed, compared with the rest of the world, compared with historical trend. So from that point of view, there's still quite strong value proposition in the market. So to capitalize on that, I believe maybe we should hold two segments of the market. On one hand, you want to have exposure to high tech sector.
Have a blessed day. Bye, baby. Be good, okay? Take care of mom and dad.
Have exposure to the deep value sector too, because
let me see your muscle, Superman. Oh man, he's too powerful. The world is safe. The world is definitely safe.
My thesis is
that's your Lamborghini. Let's go. Rocket boosters, jetpacks on, baby. Okay. Time travel. Let's go to the future. Have a blessed day. See you next time.
They put their deposits in banks. They gain 1% interest rate. But if Chinese banks, their dividend yield is 4 or 5%. So I think you can still have that kind of a valuation gap that will be quite attractive for households to move money. So to me, I think this kind of almost feel like barbell, right? So on one hand, you want to have the tech growth sector, but on the other hand, you want to have some kind of value that can be very attractive for households to attract their liquidity.
Yeah, Wang, thanks very much for joining us. Great to have you this morning. That was the Chief EM and China Strategist at Alpine Macro there. And there's a lot more markets coming up because we've got Vantage joining us to tell us about how investors can manage hedges against resurgent geopolitical risk. We'll have much more ahead on the China Show. Hong Kong markets back for the first day of trading post the Lunar New Year break. This is Bloomberg.
this is shocking for many of you that are just hearing the news and tuning in, but the response is being complicated by the mysterious domino effect of power failures along the East Coast, as well as around the East. Hey! We're already hearing reports of blackouts throughout the United States, looting and widespread panic in some areas. While no one has yet claimed responsibility for the bombings, but in short, at this point, the authorities have not ruled out terrorism or follow-up attacks from rogue states. We're giving the news as we get it, and obviously this is worrying. But stay tuned. If Los Angeles has experienced a nuclear detonation.
Calling Devin.
Jeff, did you hear the news?
Yeah. World War III.
That'd be lots of nukes. This is just one so far. Terrorism, most likely.
What's our play?
Got a place. Prepper, been planning for the big one.
Rich guy, literally thing.
Called a few months back, need security guys.
You tell me when and where. I'm there.
I'll send coordinates. No chopped up.
I got your back, boss.
Call Tara.
Calling Tara.
You're not getting on the freeway.
Are you texting Lexi?
Is that your girlfriend?
She's not my girlfriend.
You can't get a girlfriend.
I can get a girlfriend if I wanted a girlfriend.
You're not old enough to date.
Right, the other big news overnight, Blue Owl Capital, yeah, big one here. So it says it will restrict withdrawals from one of its retail-focused private credit funds. Now, the move reverses a previous plan to resume redemptions this quarter. Let's head to New York now and bring in our private credit reporter, Olivia Fishlow, who has the story for us. And I mean, it's the retail investor that was one of the operative phrases that caught my eye here. What does this mean for retail investors who have maybe gotten in very recently into private credit?
Yeah, definitely. It's a great question. And I think one of the main things that retail investors should be considering right now is how illiquid are these assets? Are these funds that I'm going to get my money back in? And I think as we've seen, Blue Owl has been able to return capital back, but it's just an important lesson that, these are retail vehicles that are being offered to retail investors, but the underlying loans that they hold are illiquid private credit loans.
How concerned do we need to be as well about the types of companies that Blue Owl is exposed to? I mean, one of its most notable concentrations is in the software industry, for instance, which is obviously facing quite an existential crisis at this point in time.
Definitely. Yeah, I think that obviously that is something investors are worried about is the level of software exposure. And I think that's why we've seen actually a lot of investors look to pull money out of these funds. And it's interesting actually that, because Blue Owl did return capital to investors, and that's why they halted redemptions at this fund. And in order to do that, they sold loans from the portfolio. And the main percentage, the majority of those, or like the most type, was software loans. I think it was around like 13% or something like that. So it definitely could be viewed by some as maybe a way to kind of limit that software exposure a little bit.
Right. I mean, any specific reason why, I wonder if we're glossing over just the headlines here, why this specific fund, Olivia? And it just goes to my next question, how this used to be just the corner of the market for it, that was reserved largely for institutional investors. And I wonder then how retail investors have been recently introduced to this asset class.
Yeah, so this fund actually is one of the earlier types of funds that were created to access retail investors, and it actually was always meant to be sort of wound down And we saw earlier this year that Blue Owl's attempt to do that and return capital to investors was to try to merge this vehicle with another public fund. And doing so would have forced investors in this fund to take around 20% of losses. So after the news of that came out, Blue Owl scrapped the merger. And now what we're seeing is that this is sort of the new plan that they've come across to return capital to investors. So that being said, there's a lot of, I think your question just underscores the fact that there's a lot of types of funds that these private credit managers have created for retail investors, and I don't think it's really widely understood exactly what type of funds they are and exactly how investors get their money back, if that makes sense.
So how do I think that AI is going to shape my role in 2026? Well, 2025 was about discovery with AI. It was learning how to use AI to increase delivery, increase output, improve efficiency. 2026 is going to be about governance and oversight and security, ensuring that as we see more AI sprawl, as we see sort of shadow MCP and other protocols being adopted, that we have a good view of what's going on across the business, and of course our product as well. And that's really where our focus is going to be, ensuring that we can manage and govern and secure the AI that we're starting to use.
Patricia Heaton takes the olive oil test. This is real olive oil. This one, not so much.
Oh, wow. So what's the test?
Here's what you do. Place both glasses in the refrigerator for a couple of hours, and then we're going to see. Okay, time to check. Supposedly,
aren't exactly how investors get their money back, if that makes sense.
Yeah, and obviously a lot of concerns because I'm just taking a look at the share price activity and you're around 50% lower than you were a year ago. So, yeah, obviously a ways for this to continue playing out. Olivia, thanks very much for staying up and joining us this evening. That was our private credit reporter there, Olivia Fishlow. And let's actually stay in this space because Bloomberg's learned that Bank of America is making a major push into private credit, committing $25 billion of its own capital to new lending deals. Sources say it plans to originate the deals from its capital markets division, which is part of its investment banking business. The move makes Bank of America one of the last major U.S. lenders to jump into the booming private credit market. Meanwhile, Bloomberg has learned that HSBC has cut 10% of its U.S.-based debt capital markets team. Sources say at least 6 people in New York were let go on Thursday, including one managing director and 2 directors. The bank is continuing to reduce costs after announcing a revamp of the business last October. HSBC is set to report earnings next week after its U.S. rivals posted strong results during the fourth quarter.
All right, so let's have a look at AI, OpenAI specifically here. So the company says it has visibility into its future chip needs, even as, of course, the broader trend in the industry is an industry shortage of those things. The Chief Global Affairs Officer of the company, Chris Lahan, also told us democratic nations need to develop shared safety standards for AI.
Democratic AI is going to prevail, or if the world's going to build out on democratic AI, I think the world does need to work together collectively to make sure you're addressing and identifying the elements that are going to be needed. And look at, we are, and I know you guys talk about this and cover this, in a unique and perhaps challenging geopolitical moment where I actually have some optimism in terms of where the world is going, particularly democratic world, is that we all are going to have to work on this together. Democratic societies do need to start to develop shared safety standards on this technology. You're seeing emerging AI safety institutes, US, UK, Japan, Australia has an early version, India's thinking about an early version. And he talked about, can we think about this as some type of analog to the IEA, the International Atomic Energy entity. But I think those are the types of I think muscles that we're going to really need to develop to ensure that democratic AI does get built. But inclusive within all of that too is how do we all work together, particularly on the supply chain piece.
But as it stands now, do you see this chip shortage deepening further? And will that slow down the AI build out? From your perspective, how does it?
From our perspective, I think look, we feel confident that we have visibility onto what we are going to need. Now, we also make sure we sleep with one eye open, right? Because you want to continue to trust but verify on all of this. We ourselves are, working with a variety of really strategic partners who are, really supportive of us in terms of access to chips. We ourselves think about how do we impart our knowledge on chip design.
That was OpenAI's Chief Global Affairs Officer speaking with Bloomberg Insight anchor Haslinda Amin in New Delhi. And we're going to actually have more ahead from the India AI Summit on the China show. That's generative AI reshapes industries and governments race to set rules. We'll speak with Wipro's Ivana Bhagaletti, who tells us why India is uniquely positioned to become a major AI powerhouse. More ahead. This is Bloomberg. Well, President Trump says he's directing federal agencies to release government documents that discuss extraterrestrial life and other unexplained aerial phenomena. Now, I've got to say, this was not the breaking news that I was expecting to have this hour, but it's certainly one of the most read stories as well this morning. So you've got President Trump that's gone on to true this that he
From the former president, underneath these.
Welcome back to the China Show. Taking a look at the Hang Seng half an hour into the session today. First day of trading post the Lunar New Year break, and we are moving to the downside here. Actually taking a look, you've got most stocks, really the vast majority in the Hang Seng index that are in the red. But if there's sort of a key theme that's developing, it is a tech-led sell-off because you've got Tencent, Baidu, NetEase, Alibaba amongst the biggest laggards so far in the session.
Yeah, and really in favor of the new economy stocks in China, right? Yes. We talked about Minimax and the several, not just one, not just two, but several upgrades from brokerages on the back of the release that they had on Monday. And I think shares already reacted, I think 18 or 25% on Monday towards the close for a further 6.7. I'm going to double check my stats on that as I speak. ZAI or Drupu is up 19%. So this new cohort, as you can see, and really this underperformance we're getting from the likes of Baba and Baidu, just as a proxy, I guess, to some of the other ones as well, pulling down Hang Seng Tech Index. So I think this is a chart that's up. It's going to come later on. Let me just look at where levels we're at right now. And Minimax actually on...
It was 25%.
There we go. Okay, thank you.
On Monday, yeah.
On Monday. So very good day, and we're continuing that today. Nikkei, Kospi, ASX, Straits Times Index coming up on your screens, and Kospi's up again. There we go. Bloomberg Dollar Index, Dollar China, and we're coming off 4 days of strength in the U.S. currency. We are now, that's now day 5, as you can see on your screens. Dollar China 690. We don't have, of course, your pivot point today as it pertains to the renminbi fix because mainland markets are still shut. So we'll get to that later. As far as Brent and West Texas, is take us really straight into the Iran story, and yeah, further gains, not to the extent of yesterday, but still gains nonetheless. Everything from 1 month implied vol to call skews are all also pointing to the upside, and suggesting oil markets and oil traders are getting geared up for some possibilities in the Middle East.
Yeah, well, what you were talking in the last hour about how much that premium is being baked in, and what sort of that price is being added, and you were saying it's $5 right now. If the tensions dissipate, that $5 goes away. But there's really a lot of unknowns exactly what happens in the next 10 to 15 days. We just know that President Trump is clearly voicing impatience, I guess, with the situation right now, and has put that deadline in place.
Yeah, and this massive buildup in U.S. military presence in that part of the world, right, is something that I think when you look at the escalation and the presence there alongside the premium that's built in almost alongside one-to-one. And as far as I think there's a fantastic piece from our folks at Bloomberg Economics that talks about how, as far as what the Iranians have done as far as the initial response, is they've flexed their muscles as it pertains to the Strait of Hormuz, right? So I think in the past, what they've done is they've threatened the closure. They've never, to my understanding at least, they've never pushed through with a complete closure, because that would also be, of course, shooting themselves in the foot as far as the shipments are concerned. But yeah, go ahead.
No, I think that's really interesting as well, because last hour we had the conversation with the former US ambassador, James Jeffrey, and he was saying, yeah, that might be an option, but it's not the option they're likely going to take. And the reason for that is that you're going to really bother China. And that's such a key relationship that Tehran has, is with Beijing. So they're not necessarily going to look to react in that way, even if Tehran has been quite vocal about saying that they will respond with full force. But of course, a lot of questions around what would even an attack look like from the US. Would it be a short campaign like we saw in the middle of last year? Would they go for something more sustained? Certainly that presence, you said the biggest going back to the early 2000s, does give them the capacity with aircraft carriers, refueling capabilities as well, to really be there for a much longer time period.
And what would that mean for the Iranian team, where the point of the guest we were talking to earlier on, of course, was as far as their motivations are concerned, given what's been happening domestically, there's also survival of the regime, right? So something just to consider as well. Can we just very quickly, let's show that graphic up over oil. So we know where oil is, up to 71. And we talked about this premium that's been built in. I think we showed the graphic just to explain it a little bit further. So it's currently at $5 is the estimate coming from Bloomberg Economics here, right? As far as the geopolitical premium on top of where demand and supply and the equilibrium price takes you. So call it $66 if this goes away, assuming it goes away, if, of course, these estimates are bang in line. But just also to consider that the premium could blow up significantly in the same way it has done in recent years, if in fact these things will escalate from here.
Yeah, let's get more of that. Oil trading reporter Rong Wei now joining us from Singapore. So, Rong Wei, thanks so much for taking the time to speak with us. How are you looking at the risks in the market right now, and also that premium, I guess, and how much has already been baked into prices?
Peter Piper persistently missed packages, so he scheduled his deliveries with Amazon Business. Peter Piper, and positively prospered. Amazon Business, your partner for smart business buying.
The good lesson was focus on great businesses, great neighborhoods, and stay calm. But the hard lesson is don't put yourself in such a precarious position that if the weather outside gets tough, you're at risk of losing.
Watch Hard Lessons, a new series from Morgan Stanley.
Right, so now the risk has just gotten a lot more real in the past week. We've seen the U.S. military forces kind of piled up in the Middle Eastern regions. And the latest development is Trump, of course, giving a physical, a tangible deadline to Iran to agree to a nuclear deal. And that's, of course, a huge step up from what we have seen from the past couple of days. A lot of twists and turns in negotiations, a lot of inconclusive talks. So the increasing presence of the military forces in the Middle East is a clear signal to the market that perhaps things could escalate. But of course, I do have to say, right now we are seeing prices in the steady territory. We haven't been seeing further increase in prices. That's because everyone still taking a wait and see approach, because ultimately if a conflict between the US and Iran breaks out, what really matters to the physical market if there's any disruption to the Strait of Hormuz, which is a key passage for the Middle East, of course a major oil producer in the world, to ship out their oil to buyers, especially for huge importers like the countries in Asia. So there's a lot of speculations, it's a lot of guesswork. It's unclear that if a conflict breaks out, what could be the energy infrastructure that could be affected, and what would be the fate of the strait.
Okay, so let's talk scenarios then. In the event we do get a military escalation, I think it depends, of course, on the type and the extent to which, but is there a range in prices that analysts are now penciling in if in fact we get to that escalation? And on the oversupply question, what does the fundamental story of oil look like if we were to strip out this geopolitical premium?
Right, So, of course, fundamentally, the narrative hasn't quite shifted. The oil market is still on track for an oversupply this year. But what is up for discussion really is the shape of how this oversupply would take. Like, for instance, at the recent IE week in London, a lot of oil executives have pushed back on talks about an impending surplus. A lot of people in the market are saying, hey, we've been talking about this global glut for a while, but we haven't really seen it manifest. So where could it be? And I think one hint that we are seeing in the physical markets is the build-up of oil stuck on water. So there is a huge hoard of oil that's out there floating at sea, held in tankers, and by and large, they are sanctioned cargoes, which means that only a limited pool of buyers can actually bring them in. So what oil executives are saying is that, yes, there is an oversupply, but this supply is not meant for them. So, and in fact, with more and more oil importers shifting away from sanctioned crude, there is increased competition for your mainstream conventional crude grades, which has also lent a bit of bullishness to today's oil prices.
Wrong way. Thank you. Wrong way there in Singapore for us on the oil story here. Let's bring in Hee Chen, Senior Market Analyst at Multi-Asset CFD Broker Vantage Markets. Hee, good morning from Hong Kong. Thank you for joining us here. So every time we discount geopolitics as a risk, it rears its ugly head, and here we are again talking about it. So how do we need to be discounting not just geopolitical risk, but also the potential for energy price inflation right now as you sort of map out markets?
Yes, indeed. I feel that we talk about geopolitical tension more frequent than ever. I think in the past 2 or 3 years, we have kept talking about that. Now, I feel that this is not just a temporary risk that we used to thought that it was, but now can kind of embed it into the economy whole landscape. As you mentioned, that not only that will probably limit in just in the oil prices, but the next question is what will be the impact for the inflation. I think I 100% agree with that. What Long is saying, that there's quite a lot of guesswork about when we're talking about geopolitical tension. Everyone will asking about what's the next, and so the market will kind of be putting the risk premium. I saw that previously that market seems to putting a $5 risk premium for the oil prices. But potentially, if you're looking back into last June when the U.S. attacked the Iran 3 nuclear site, the prices even spiked above the $78. So that's sort of potentially the market will price in. Whether or not they will translate into inflation, we do see that happening back into 2022. And if that's the pattern, I think that's probably the worry that we have to concern about and price in for the not just the oil price, energy prices, but also equity markets as well.
So how do you go about constructing a portfolio in this sort of environment if you're saying that geopolitical risk is sort of the new normal now?
Yes, indeed. I think that is a new normal. And I think rather than previously we're talking about 40-60 or even 30-70, I think that probably in moving forward under the portfolio probably a geopolitical hedge. And under this hedge, I think that will be a part of them will coming from the resilient assets like precious metal. We already seeing that has spiking, that reflecting this trend. Also something if you're talking about the equity market, that will probably more selective about the particular industry or particular company that do have the resilience either in terms of supply chain or either in terms of the target market. They could bear the risk for whenever the geopolitical tension attack this industry or attack the economy as a whole.
Hebe, what's your take on this either buy America or sell America trading strategy? And I also want to get the take from your perspective on the flows you're seeing and as far as the different products and flow products you guys have there at Vantage Markets.
Peter Piper persistently missed packages, so he scheduled his deliveries with Amazon Business. Peter Piper and positively prospered. Amazon Business, your partner for smart business buying.
Well, I think there's a two side of story I'm looking at that you mentioned about buy or sell America. I think they do have a particular buy. I think that yesterday the Bloomberg headline saying that the global falling interest in the U.S. equity market is still very high, actually getting into the record high in 2025. They're showing that even the people talking about this, a bit of the diversification, the main interest still stays. And not even mentioning because the U.S. stock market is where the center of the technology development. But on the other hand, if you're looking for the currency-wise, I do believe that debasement trade that we talk more often in 2025, that questioning over the